Okay, welcome back. It is Sunday night. I'm going to go over Friday's movements on the market and yeah, we're going to analyze the model, why I didn't trade, and what we did right, what we did wrong. And then also I'm going to go into the news for this week and yeah, just see what we've got on the cards, potential days that we're going to be looking at trading, and yeah, so overall this week took 3 trades and we're up like 350, something like that. So it's very nice. We had 2 wins and 1 break even. And yeah, so on Friday, we got on the hourly. Pretty much, let's go on a 4 hour. So as I marked out the other day, we had this daily volume imbalance. We also had this 4 hour fair value gap. And as you can see, price has come down, tapped this 4 hour fair value gap, and the bodies of the candles have held and respected this daily volume imbalance here. And then since then, we've seen beautiful move up after 1, 2, 3, 4 liquidity zones that have been taken. So it seems to be that this was just a little dip for now in the markets. If we hide all of them, obviously nothing's confirmed, but you know, we've got a nice little engulfing candle here. I wouldn't be surprised if we see price continue upwards. But yeah, you know, we've got lots of imbalances in the 4 hour charts here, so I wouldn't be surprised, you know, price reacts off this fair value gap. My voice is going. Reacts off this fair value gap, maybe get like a little pullback into here. Don't know if we'll see price revisit this level. It would kind of make sense, but yeah. So in terms of Friday's movements, you know, if we look at the S&P and the NASDAQ, we had that bullish structure going on, you know, making higher highs after trading off of these zones. Imbalance created here on the S&P, tap back into that, push up. Imbalance here in the London session, tap back into that, push up. Imbalance created at the end of the London session, you know, tap back into that, and continuation. In terms of draws, we had Thursday's PM high, Thursday's AM high, Thursday's London high, and Wednesday's Asia session. And yeah, we'll go into my notes. So the model played out pretty nicely. Now, I didn't take any trades because we had red folder news on a Friday, which, as you know, one of my rules is I will not trade that just because it's uncertain. And I've put here to make a note of the higher time frame point of interest tapped, and the trend reversal, which provides greater conviction and increased probability over larger moves. And that is worth keeping runners in conditions like this, because as you can see, if I went for a standard 3 to 1, you know, even still, this would have been a lovely £388 in 2 minutes. If we waited for the the entry at 9:30, within 2 minutes, 9:32 there, TP hit. Beautiful, beautiful, beautiful. Now, if we then drag this up, or like kept a runner going, for example, for, just close that, you know, AM high, that's a 5 to 1, or even, you know, just to here, 8 to 1, or even the London high, 13 to 1. So obviously normally I wouldn't do this, but with that sort of position sizing, that would be about 1.7k, which is really nice trade. So it's just something to keep in mind, you know, going forward. Obviously 3 to 1 will be my standard position sizing, and if we have conditions like this where, you know, we can see that there is clearly a different model playing out like a buy model from a sell model. And it looks more likely that all of the buy side imbalance, all the buy side liquidity targets are going to get tapped compared to all the sell side. Then we can, well, I can look at the possibility of leaving a runner. So I also put in here 2 taps of midpoint and more bullish than US500, no, US100, which made it a better market for choice of trade. So if we look at the NASDAQ, you can see that price did trade down from the zone and would have been stopped out here. But there is a reason for this. So the fair value gap created in the London session was unfilled, and that could have acted as an entry point there. Whereas on the S&P, you know, this was already traded into earlier on before the fair value gap above that, which is what acted as the next leg up. So just a quick comparison again. It was same here. You know, we've got the fair value gap here, traded into that, but this is unfilled, lower probability. More likely the price is going to come down into here and fill this before the move up, just manipulate people out. And yeah, so overall, I'm pleased that I followed my rules, you know, took from my previous lessons where we're not trading Fridays, we're going to stick to that. It just takes a bit of extra stress off the table. Plus it was already quite a good week. So I didn't really need to take any more trades. So I'm looking forward to next week or this week. And we'll just see what goes on. In terms of news, what are we on today? We're on the 8th. So got no red folder tomorrow. Tuesday, got core retail sales, month on month and retail sales. So, you know, it's forecast that this is going to be a bit lower, but we'll just have to see. Release date delayed by 27 days due to government shutdown. So I'm not sure whether that is to be delayed by 27 days or if that has been delayed by since last month. So we'll just have to wait and see. Typically, you know, we tend to see the news updated, whether it's tentative or they're going to delay it a bit closer to the time, like it is Sunday night and this is Tuesday. Unemployment rate and non-farm employment change. Again, if this continues to drop lower, if the unemployment rate continues to rise, then that could be a little bit bearish for the markets on the Wednesday. Potential shorts maybe, unless, that's USD. So unemployment rate and unemployment claims follow 2 different days. So it's forecast that it's going to drop a little bit. So we'll just have to see how that goes. And then Friday, again, we've got CPI. So we're not going to trade Friday. So tends to be the usual case. We look at Tuesday and Wednesday. Those Tuesday, Wednesday, Thursday seem to be the best days to trade, really. In general, Monday's a bit hit or miss, especially with no news. But, you know, depending on price action at the time, there's always an opportunity, or not always an opportunity, but depending on price action at the time, there could be an opportunity for the break and retest to play out. We'll just have to see. We'll look at the previous daily high and previous daily lows. Yeah, I'm looking at this. I'm not thinking that we're going to come all the way down here. That's what, 6729, 6944. I don't see price moving that far down this week. But like I say, we'll just have to wait and see. So yeah, again, Tuesday, Wednesday, Thursday looking to be ideal. We'll have a look tomorrow, see what presents itself. And again, I'm just going to keep the same mindset going into the rest of this week and the rest of the month. In that, you know, we don't have to rush into anything. We're already up like 5% this month, so it's more than ideal. And yeah, we can have a quick scan at gold. I think that's, yeah, it's got back above 5K now. So cool. That initial position that I marked out last Monday still wouldn't have been hit. It would have been stopped out either way. But nonetheless, that's fine. It's looking like gold is recovering from this massive dump. And, you know, we're just going to see high highs made over and over again. Silver, it's kind of hanging about 80. It's dropped down 63. I don't know. This, I still feel like there's potential for it to stay bearish. You know, we've got imbalances down here on the daily chart. What about weekly? You know, there's all this. Maybe one more drop down, but again, that's all dependent on how it moves and the news that goes on. But yeah, one final thing I did do, I did add back to my position on take two as it saw quite a big sell-off. As you can see, in the last week or two, in the last couple of weeks, 244 stock price down to 189. My original position in this was around 182, so you can see we've come all the way up, had a pullback, and I've got GTA 6 release marked out as this is the definite date now. So this is the 19th of November, which is confirmed. So this just gives me, you know, higher time frame idea of what I'm looking at, what I'm looking to expect. I have no doubt that after GTA 6 releases, that price will continue up. It's just going to be, you know, it's one of the most anticipated pieces of media ever, pretty much. And I wouldn't be surprised if it generates billions. So plenty to look at there. I did add to my position at around 192, 193. So yeah, that is that. Chevron's moving up nicely still, so we're running pretty nicely. You know, I've been investing in Chevron all the way since like July 2023. So I've been buying and buying and buying and buying all the way through here. And it looks like now that we are starting to see a breakout from this range. But again, time will tell. It's just more of a hold with Chevron because they're nice dividend stock. So yeah, with all that being said, I think that's going to pretty much do it for me this evening. And yeah, see how we go going into the week, and I will catch you tomorrow.